So foreclosure activity is increasing. It's increasing every month. More stuff is happening in the marketplace. There's no denying it anymore. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Hope you're doing well. Today we're going to focus in on some of the foreclosures that are filings have been going on the past little while. So ATTOM Data Solutions every so often publishes some information. This is, you can pick this off their website. It's on their news and insights section. It basically is just a summary. But the point here is that U.S. foreclosure activity is increasing annually in Q3 2025. So really, since the start of 2025, we've seen a slow but steady increase in foreclosure activity, filings, or auctions, repossessions, whatever you want to call it, throughout the country. Certain metro areas more than others, which is interesting. So if you take a look at it, it basically says that over 100,000 U.S. properties had a foreclosure filing during the third quarter of 2025. It's up less than 1% from the previous quarter, but up 17% from a year ago. So yeah, it's been steady, increase, as far as volume is concerned. Year over year, there's obviously a larger increase in the foreclosure filing. So you got to keep all that in mind here. And everybody, by the way, this video is brought to you by our friends at foreclosure.com. So if you want to look at the things I'm talking about here, which are distressed properties, foreclosure filings, tax deeds, stuff like that, go to gethousingdata.com. That's gethousingdata.com. Check it out. All right. Okay. So, whoops, too quick here on my computer. So this is, I guess you could see the little chart here. All right. Total of, 72,000 properties started the foreclosure process in Q3, up 2% from the previous quarter and up 16% from a year ago. States with the greatest number of foreclosure starts in 2025. Now, this is kind of what I'm interested in, right? Like foreclosure activity, filings overall. I mean, it's not always, starts. Starts basically means, hey, it's a new foreclosure. Someone, a homeowner, property, whatever, is now falling into this situation here with the foreclosure process. So, the total filings are all activity, but where the starts are, like, as I said, as they're called starts, really the new stuff coming in. So the states that had the greatest number of starts in third quarter: Texas, 9,700, Florida, almost 9,000, California, 7,800, Illinois, about 3,500, New York, about 3,200. So these are what I would call your heavy hitter states. These are the big states, obviously with population, consummate, you're going to have, higher than average, comparatively speaking, foreclosure starts. If we take a look at the graph here, this goes back to 2005. I know you can't see that. You can see how during the housing crisis, how on a monthly basis things were peaking, peaking basically in 2009 up there as far as, what's being filed on a monthly basis. And you could see after that, it kind of slowed down a little bit, still quite voluminous. We were always on a decline. So with a housing, recovery, so to speak, quote unquote, you're going to have less foreclosure filings. And obviously the big drop off there is when COVID hit and we had the foreclosure and eviction moratorium. So basically for, I guess it was almost about a 2-year period there, or at least a year period. You could see that there was very few foreclosures that were filed. Obviously, it picked up after that. It's kind of been about the same, kind of meandering away, and we're starting to see some increase right now. So we're what we would call, and everybody refers to as we're almost at pre-COVID foreclosure filing volume, so to speak. All right, and that's on the starts, which is what's more important. Now we talked about the states, the metros. With a population over 200K, that the greatest number of foreclosure starts included Houston, Texas, so 3,700 plus starts. New York, 3,400. Chicago, 3,100 and change. Miami, 2,500 and change. And LA in California, about 2,300. So kind of like, the states that are up there, clearly there's always a big city backing the state's volume, and we can see it right here. So ultimately, in the end, to me, it's the same thing. The same states that had issues back in the day, in the last housing, crisis and crash, it's happening again in the same states. Of course, other states, but obviously your top ones are right here. So kind of interesting, right? This is kind of cool. The average time to foreclose decreases 25% from last year. So everybody has a story of, oh, my brother-in-law or some connection of family or remote friend, etc., who stayed in their home for 5 to 10 years not paying their mortgage, blah blah blah. So sometimes people don't really, we'll call it, value the foreclosure process as being very detrimental to their lifestyle, or and just what's going on with respect to how they can keep or save their house. So because there's all these stories about people who sat there for years not paying and they remained in their homes, etc. So that was happening back in the last housing crisis, and the reason being because we had poor data, not consistent data. We had court systems and trustees that were overwhelmed with the volume, so really it was difficult to catch up, and lenders weren't staffed. And I've got hundreds of horror stories of people who faxed their loan modifications in, and the lender kept saying, we don't have it, we can't find it. Well, I just faxed you 50 pages, I've got the receipt here from the fax, from the FedEx center, whatever, and they just lost it or couldn't process it, right? So that's why you had all these issues back in the day. Just everything was just about volume and trying to catch up and CYA, right? Well, now you see that chart here, that the average time frame is coming down. So why is this important? Well, number one, two things I mentioned. CYA. Lenders were losing, and eventually they had the government bailouts, which is TARP, Troubled Asset Relief Program. But ultimately, they were scrambling to just catch up and not to lose their shirts. All right, so that was kind of an issue. Now, fast forward to today, we have way better data. So what I mean by that is the systems that the lenders and servicers have are probably much more sophisticated. They have better data. They can see things, coming down the road a little earlier. There's more home retention programs out there, but the lenders don't look at this as a CYA. They now look at this as the foreclosure process and a foreclosure auction as almost like a profit center, because they feel that there's enough investors out there, or hedge funds or REITs or whoever, institutional housing buyers, that will buy at the auction. So you're seeing a different time and a different focus right now. Also, with the court systems are not inundated, so if you're in a judicial type state like Florida is, we're seeing stuff move very, very quickly. What used to be a few years, I've seen things that got filed in early 2025, maybe January, February, and they've already gone to foreclosure auction. All right. So gone are the days where you can just sit in your property for 2 or 3 years doing nothing, just because the volume in the system works that way. The system is now working against the homeowner. So if they don't take effort to fight the foreclosure case or look for alternatives or solutions, they're going to lose their home. As simple as that. And a lot of homeowners that we come across, just they're not ready for that, and they don't expect that. It comes as a shock. So just keep that in mind. So everybody, if you enjoy the videos that I produce, as I always say, I'm going to try to produce a little more regularly now because the market is changing. If you could subscribe, make me happy and help my channel grow. Okay, thank you very much. Okay, so we talked about the foreclosure volume on the starts and activity. Obviously, ATTOM produces what's called the foreclosure rates by state. So the foreclosure rate by state is one foreclosure for every X number of housing units. All right, so this is their top 10. The number one state for September. Now realize that this is September, and it's funny. It's all based on filings and housing units. So some states that you don't think could be in the mix are in the mix, and some that you think should are not. It's kind of weird, but it's all based on activity and filings. Okay, so the number one foreclosure rate state in September 2025 was Florida. 2 was Delaware. So people go, what about Delaware? Well, again, it's a ratio. It's not a peg count. It's a ratio. 3 is Nevada. Okay, that's the one that's usually up there. 4, Indiana, that's up there. 5, South Carolina, that's always a state that's up there too. 6, Illinois, yep, exactly. 7, Utah, that's kind of an outlier as far as I'm concerned. 8 is Ohio. Ohio is usually a pretty robust state for foreclosure filings. 9 is Iowa. I found this to be a little bit, again, as an outlier. And then number 10, Texas, which is no surprise there. So again, it's, as I said, number of housing units per per foreclosure filing, and that's how the rate is calculated. So if we take a look at the states here, and so obviously that was your top 10. This is just in their bar chart format here. Okay, let's go to the next slide. 11 through 20: Maryland, California, Georgia, Jersey, North Carolina, Pennsylvania, Michigan, Alabama, Arizona, Connecticut. All right, that it's all average stuff. You can see some of the bigger states, are in the mid-teens there, going from 21 to 30: Louisiana, New York, Colorado, Alaska, Wyoming, Virginia, Maine, Washington, New Mexico, Oklahoma. So there you go on those. 31 to 40, you got Massachusetts, Arkansas, New Hampshire, Hawaii, Missouri, Idaho, Kentucky, Tennessee, North Dakota, and Wisconsin. And your last 10, which we'll show you here, is Nebraska, Oregon, Minnesota, Rhode Island, Montana, Mississippi, Kansas, West Virginia, Vermont, and South Dakota. So actually, if you look at the total foreclosure filings column, which for the last two, 8 foreclosures for Vermont that were filed and 8 foreclosures for South Dakota, which is indicative maybe the population base, the strength of the market, a lot of economic indicators. Maybe things are happening in those two states right now. So there are very few foreclosure filings for Vermont and South Dakota. But if we flip the script and we go, okay, let's take a look at peg count. So I just pulled up here the states with over 1,000 monthly filings. I just cut and pasted from that list that you saw, and I put them in descending order, starting with the most filings for September. So you can see that Florida was the number one rate, foreclosure rate state, but also had the number one 4,621 filings for September. California was the 12th as a rate, but had over 4,000 as well. Texas was the 10th, had almost 3,600. Now there's a big drop off between the top three into the next realm. So Illinois was 6th with rate, 1,888. New York was 22nd with rate, but had 1,701 filings. Ohio was in the top 10, and they're on the top 10 here as well too, 1,693. Pennsylvania was number 16 in the rate, but 1,412. Georgia 13 in the rate, but 1,251. North Carolina 15 in the rate, 1,223. Indiana was up there as far as rate was concerned, but 1,095. And Michigan rounds out with number 17 in the foreclosure rate, but over 1,000, 1,090 foreclosure filings for the month of September. So these are the states that have I said over 1,000 monthly filings. Typically, if you look at these states, you're gonna see that these are bigger populated states, so obviously more activity going on there. That doesn't surprise anybody. And the rest, there's other, if you take a look through the whole chart, there's states with 700 filings, 600, 500, 900. There's states with decent numbers out there, all the way down to those two, that have 8 each. Right. So point though is that foreclosure starts are picking up. So this is the process where people are going. The lender is reaching out saying, hey, you haven't paid your mortgage for X number of months or years, whatever that number is, and now they've had enough. Maybe the homeowner has tried a home retention program like a loan modification or something else that's out there that may have failed, or they didn't qualify. So now it's moving to the foreclosure bucket and they're starting that process. All right. So that's what's going on in the marketplace right now. So, it's, when you see this, what does this mean? Okay. Well, right now, these are foreclosures that have been filed and foreclosure starts. They're not on market, so it's not like, hey, I can go to Florida and I can grab 4,600 plus of these distressed properties and try to buy them. Okay, because what typically happens is that these are not on market or listed within the local MLS system, for example, and the homeowners are trying to figure out what to do. Like 99% of these are what's called off market. They're not listed. They're sitting there. I'll say the word available, but you have to connect with the homeowner to generate an opportunity to see if you can help them and purchase their home, etc., through whatever means you want to there. So just you keep that in mind. As time goes on, we will see more and more of these properties becoming maybe listed as short sales, but right now it's virtually nothing. Like when you take a look at even where my area here, when I take a look at the number of foreclosure short sales that are say listed in the MLS compared to the overall number of listed properties in the MLS, it's usually 0.1%. So it makes no impact on the marketplace whatsoever for various reasons. And we'll go into that maybe in a future video. So my point, obviously, is that there's a ton of distressed, defaulted, people not paying their mortgage under the radar. I call this the shadow inventory. What they do with it, who knows? What the homeowner does, it's up to them. But a lot of these are going to end up on the wrong side of the foreclosure process, and a lot of homeowners are going to lose these homes at some point in time, unless they do something to, again, home retention programs, which those are changing now as well too. I don't know if you guys heard about that. They're starting to change with respect to some of the new guidelines FHA put into place. And what we're seeing is, when I showed you that graph with the trough of foreclosure filings when COVID was here, well, we're going to catch up now, okay? Because essentially a lot of people, the foreclosure moratorium stopped a foreclosure case from moving forward, or even a foreclosure filing. People, so that was a benefit to homeowners. Maybe you took the forbearance program, which could be a benefit to you. Okay, after forbearance, if you couldn't make up the payments, then what happened? Well, guess what? You were put into a loan program, loan modification. So maybe they did a loan mod. Maybe they put the missed payments at the back of the loan is called like a deferral payment, which then becomes a sort of like a non-interest bearing, non-payment required second mortgage. Yeah, it's due upon refi or sale, but you're not having to deal with that. So that was a bit of a break for homeowners. But it just comes to a point in time where all these sort of, we'll call it kicking the can down the road, semi-type solutions are kind of at their end of their lifespan right now. And now it's time to really deal with the marketplace. So economics is tough out there. Jobs are tough. Everything is more expensive. So people are having a lot of difficulty making ends meet. So it's not, I'll tell you right now, a lot of the new foreclosures we're seeing are not, oh, these are bad loans or whatever. No, they're people who bought FHA loans or VA loans, etc., and have economic issues, and that's why they're not paying their mortgage. Simple as that. Yeah, there might be some other, issues that go along with that, but we're not seeing, subprime was back in the day, so you can't blame subprime for the rash of foreclosures we're seeing. Could you blame FHA? Sort of, because in my opinion, I think FHA is today's subprime, because you're having lower credit score entry level in, you're having a higher debt to income ratio, which means they can spend more of their income on housing as opposed to a conventional loan, which is much less with their DTI ratio, and also low down payment. So one of the things about FHA loans or even VA loans is you have some VAs can have zero loans, and FHA, the lowest I think is 3 to 3.5% money down. So if you think about it, for me, we call it skin in the game. Obviously, everyone's heard that phrase. Well, skin in the game, the more skin in the game, the more reluctant you are to walk away from your property. All right. So that's the scoop here. So here we have a lot of these recent, and again, these aren't like FHA loans from 10 years ago, they're foreclosing. So a lot of them that were done during the COVID timeframe, 2023 and even 2024. So they're recent vintages, which basically to me shows that there was the desire to get into housing and to get that property and to get FHA's backing the loan. That's great, but this is the aftermath now when insurance goes up, taxes goes up after it's reassessed, et cetera, et cetera. So things can change in the dynamic of a housing payment quite easily, and maybe people didn't expect that. All right, so that's what's going on right here, guys. Filings are continuing. So if you're not looking at this market, the distressed market, for either purchasing a house or investment opportunities or income opportunities, I'd suggest you start paying attention, see what goes on here, because we are busy, very, very busy. It's only getting busier. And, again, I've been talking about this for years, and it's been quietly happening now. That's why I haven't really been doing much of my videos over the past little while, just because I'm too busy. Right? As simple as that. But you gotta get back in it here and there. And again, back in the last housing crisis, you did have major bailouts on housing and other industries across the board. Well, basically right now the Fed can't bail real estate out. There's a foreclosure crisis looming. So I think what we're going to see various metros or states start to have correction type declines in their home values. And as I said, various metros we're seeing right now are having more foreclosure and distressed activity. And ultimately, in the end, the lenders can do their best to sort of push that off or hide it, but I think now the volume is starting to become a little bit difficult to handle. So I think we'll start to see it manifest more in the open market and start to see how it plays to drag down home prices, etc. So that's what we got going on here. I've showed this slide many times. So this is what we do. We do any of these things. In my business here, we have experience with that. It's what we do. So my point again. I don't like to always say the word "my point," but the whole point to this slide is the fact that the pre-foreclosure market you've got not just short sales, which that's my we'll call core specialty here. You've got other things you can do in the pre-foreclosure market that would help you acquire a home at a discounted price, et cetera, et cetera. So just, if you want to reach out and talk about it, just drop me a line and we'll go from there. So once again, everybody, well, thank you for the views, likes, and comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. Look forward to speaking with you shortly.